everyone, and welcome to a roller coaster ride as we get through another day of COVID. Cathy Sabater, mortgage planner and proud veteran. What? The Fed fund rate is going to be zero for almost 3 years or beyond? That's what they're saying. But remember, that's the Fed fund rate. That's how the banks lend money to each other, right? How it's going to affect mortgage-backed securities is another story. So right now, stocks are sharply lower and mortgage bonds are up about 9 basis points. So what does that mean? Remember, when the mortgage back go up, that means interest rates should be going down, okay? So they're still testing that 25 and 50-day moving average. So I'm going to wait another day or two, see how the news affects everything, and then start floating again or locking the rates. So when the Fed state that they're going to put this Fed fund rate to zero, that is what the banks charge each other, okay? So they're saying they're going to have that into 2023. But that's not mortgage interest rate. So how does that really affect us? So hopefully we'll get to continue having these low historical rates. But at the same time, remember that 0.5 rate is still lingering. So even though we're having all this momentum, at the end of the day, we still need to make sure that people get off the fence and do what they got to do. So National Association of Housing states the housing market, remember we say it's hot, hot, hot. Well, from 78% to 83%, and that's for the month of September. What day is it? It's only the 17th, right? So, of course, builders are feeling really good, and 83 is an all-time high. So remember, if it's over 50, that means we're expanding. There's confidence in the housing market. Buyers want to buy, sellers want to sell. But it's interesting because when you're looking at numbers, because I'm a numbers person, the housing starts. So you have existing homes, then you have a housing start. So housing starts in August was down about 5%, but that was for multi-units. And what we really need is single family units, and that was up 4%. And guess what? 12% year over year. Remember, I'm doing all of this. This is nationwide. So how does this affect you? Because I know there's a lot of chatter going on that the rate is zero. No, not the rate is zero. The Fed fund rate is staying to zero. It was 0.25. Now it's zero. Then for mortgage-backed securities, for mortgage interest rates that is affected, then those are still historically low, but you still have to trend the market to make sure that you lock and or do what you need to do. So right now, you see how we're testing it, right? Again, this next level. So hopefully we're going to push up. This is that roller coaster. Look at this. We would lower down. We need to go back up, right? So hopefully we don't go down, right? Because if this goes down, that means interest rates are going to go up. Any questions, give me a call, 619-846-2675.